What's going on, everybody? Welcome to a Capital Hungry educational webinar and update on crude oil. We're just going to be taking our time breaking down some of the impacting factors from an investment standpoint on oil and from a financial market standpoint. Okay, we're not going to be talking about oil mining and all this other various topics. It's going to be similar when I do the crypto market update as well. We're going to be looking at crypto from an investor, trader, financial market standpoint, just like we would have that objective viewpoint towards anything else. We're not going to have some attached bias or be focusing on things that necessarily don't matter when we're primarily looking to trade or invest in these various trading instruments. But anyways, it's been a while since we've done analysis on oil. I've just been so busy with everything else that I personally stopped trading it after we had that crash down to minus 40. After we had that crash down to minus 40, a lot of brokers disabled the trading for a period. And then during that period, I really just stopped looking at oil because I knew it was just going to have a massive rebound and correction move. And I'm going to be explaining all that now. We're looking at oil supply and demand. But this is going to be a great webinar to supplement with the oil educational webinar that is already within the Capital Hungry webinar vault and other previous oil breakdowns as well. But now, we know that if you've watched the educational webinars, oil is a major global economic pillar, I like to call it, right? It's used from a microeconomic standpoint in your day-to-day use, whenever you drive around or any type of transportation you're going to be using, from buses, Ubers, taxis, your own vehicle, or whatever it may be. It's used from a more macro perspective with institutional trading, actual consumption of oil within industries, factories, and around the world, and the production. And there's a lot of other products that are essentially have oil within their production process and that type of consumption as well. And then we have global competition between oil companies and various oil countries, global conflicts and geopolitical tensions and issues such as war or literal country takeovers. Obviously, speculation is always one, historical repetition, and market cycles. Now, market cycles and historical repetition are very key because this is something that we see universally impact any trading instrument that we may look to invest or trade in, whether it's a precious metal safe haven like gold, whether it's a current individual currency like the dollar, a currency pair like GJ, stock market like US 30, or a commodity and real world used resource like oil. Supply and demand, market cycles, historical repetition really impact everything. And we're going to be breaking that down further just to give us a good macro understanding of oil before we start jumping into any intraday continuation analysis and looking at what impacting factors we have in the current day. But anyways, let's zoom out here. So yeah, just quickly listed out the main impacts on oil from a trader and investor perspective. The majority of ones that we have focus on and we can understand is our own speculation, geopolitical issues, historical repetition in market cycles, and even a bit of OPEC information. Obviously, institutional trading, global competition, price setups, and so forth, and order flow from a very higher level perspective. We cannot get that information. So we want to focus on what the information we can get, what we do understand that impacts oil, obviously as a real world consumed resource and as a global economic pillar. And remember, even with all these oil dominating countries from the Middle East or wherever it may be, we can still see that that oil is still traded in the US dollars primarily on a global standpoint. Any countries that try to go against that and trade oil in their own standard currency or anything else besides the dollar usually end up getting raided and taken over. So anyways, that's a whole different webinar for a different time. But anyways, let's jump into it here. So the first thing I want to look at is a bit of historical repetition with this massive drop that we saw during the 2008 financial crash, which is always a great reference point. Okay, you can see that this brought us all the way from $150 a barrel down to roughly $40 a barrel. And this crash here goes off the screen. I know it stops here at 0, but crude oil during the pandemic crash, and I'm going to tell you guys the impacting factors why, actually went to -40. So the actual crash on oil from about 60 to -40 was almost the same type of size in the crash from like almost $100 a barrel when you're looking at the crash, $80 to $100 a barrel. So that's number one. The actual size of the crash, so oil pretty much came down to this point, but it's not showing that on the chart, and then did this recovery for anybody who remembers that, right? So when you're looking at the historical repetition of going -40 back up to these price points, we actually even seen a sharper recovery. But what we want to understand was during periods of economic uncertainty and volatility, here being obviously the 2008 financial crash, here being obviously the 2020 pandemic, you had almost an equal size drop of almost $80 to $100 a barrel, where here we actually we actually made history by going into the negative integers on the crude oil prices. That's never been done in history before. Okay, so what that tells us is that market cycles and economic cycles impact commodities, precious metals, stock markets, and everything across the board. There's nothing that can avoid a natural market cycle where the whole point of investing is to buy low, sell high, and make money on your investments or trades or whatever it may be, and then re-enter the market and continue to follow that pattern. So when you look at it from a market maker perspective, all you really see here is selling at a high induced with the fundamental catalyst being the financial crisis, coming down to more bargain prices from an investor's perspective, and potentially having these years worth of gains from $40 a barrel almost all the way to $100 a barrel before having this deeper correction move in the 2014-2015 period, where we had much larger oversupplies, which I'll show you guys that which started to regulate in the 2018-2019 period. And this chart here is almost going to be the inverse of the oil supply chart, which is going to validate another fundamental concept besides market cycles and historical repetition, that supply and demand from a macroeconomic perspective impacts everything across the board. Okay, so we can't go that far on this chart here, but you can see that this is the oil global floating storage figures, right? This means how much excess oil there is in global storage. Now you can see fairly healthy figures are during the 2017 to 2019 period, and these were relatively larger spikes that we saw in global oil storage where consumption was relatively lower, right? You can see the same time during 2015 all the way to 2017 when oil supply was much higher, oil price during that period was also much lower. Okay, let me make this smaller. Right? So 2015, pretty much going into 2015 here, 2016, you have this downside move on the US oil, crude oil overall, because you have this massive oversupply during that time period where we know that an increase in supply and decrease in demand equals a lower price on whatever that product, service, or good may be, right? So you can see that the oil chart is almost the inverse in relation to its supply chart, which gives you a lot more confirms of how supply and demand on a global standpoint impacts US oil on the charts that we trade as technical traders. The reason why I want to go over historical repetition, market cycles, and real world supply and demand first is because a lot of us retail traders, when we're looking at technical charts and you're only trading technicals, have a big detachment from reality and don't understand that like everything that we're trading here is literally being impacted day in and day out from the real world. Most people just see the charts as like a game or like, oh, this is just some random shit being printed every day here. Like it's not impacted by anything in reality, right? When it is. You have tons and tons of factors with global oil competition, fundamental catalysts, historical repetition, overall economic and market cycles, speculation, 1% when 1%ers manipulation and different crises and opportunities that we've seen occur time and time again. And this is something that impacts all trading instruments. So is everybody following along with that so far? So you can see we had this downside move when we had this increase in supply and storage of oil. But as that supply started to decrease and started to regulate from the 2017 to 2019 period, you can almost see that oil followed an inverse pattern there. Do you understand what I'm saying? These are ways for us to validate those fundamental concepts of historical repetition, supply and demand, and so forth using the technical charting. Now, look at what happened when the COVID lockdowns hit 2020 period. A record-breaking spike in oil where this is in the millions of barrels here to the left of the screen. And right here was extremely high figures prior when you're looking at 70 million barrels in overstorage, right? With the pandemic period, because COVID led to global lockdowns, two things happened. You had a massive decrease in the consumption of oil as you had millions and millions of cars off the road, millions and millions of jobs and factories and so forth being shut down or suspended for a time period, the globe on lockdown, and you also had OPEC not taking action till way too late and never doing production cuts ahead of time as per what was supposed to be in the expectations to keep the oil markets more afloat and more healthier. But anyways, to summarize, during the initial impact of the pandemic, that real world fundamental catalyst of economies being locked down led to a massive decrease in the demand of oil, as well as the consumption of oil, and a massive increase in the supply of oil. The same time, 2020, you have this record-breaking bounce in the supply of oil and over storage, as well as a decreased demand. You also saw oil price crash to -40. And the same time, within that yearly period that we started to recover from the pandemic markets, you saw oil supply start to decrease in storage. Why? What started happening to oil consumption and demand months after the initial pandemic was priced in and as economies started to slowly open up, as vaccinations started to come to the scene? Right? Consumption starts to regulate, demand starts to regulate, and demand of oil actually starts to go even higher than it was pre-pandemic because countries, especially like China, are working double time now in terms of their industrial production and manufacturing production, right? One of the main reasons this dropped so aggressively was in fact China started recovering from the pandemic a lot faster than the majority of the other countries. And we saw that China dealt with COVID first, also dealt with all the lockdowns, vaccinations, and everything else, and then have been quiet since, just back to work on the industrial and manufacturing grind. Their consumption of oil was going through the roof, and they already had so much oil in storage. From what country? Who got their oil sanctioned? Who had sanctions against them during the 2019-2020 period? Iran. So Iran was being limited on their exporting of oil. Guess who was taking in all that oil backdoor and storing it on their ports? China. Right? So we can see from a macro standpoint, the historical repetition of crisis and the opportunity it brings, but also the relation of that in terms of the supply and demand of the actual physical resource that is oil itself. You can see how the price of oil chart is almost the inverse of the oil storage chart. And even when we're looking at those time periods, does that make sense to everybody? Okay. Okay, now let's look at more current times in this last yearly period. Now that we understand the majority and main fundamental impacting factors, now we're just going to be sort of zooming in further and understanding what we have coming to the table now in terms of economic recovery, Middle Eastern tensions, and so forth, right? So now, on that chart, I just closed it now, but you guys could see that oil supply and oil storage has become a lot more regulated, right? We saw that oil supply chart spiked up at the 2020 crash, and now a year later is almost back to more regulated 2015, 2016 levels. The same time, oil here did the inverse, and we are also back to 2016, 2017 prices on crude oil. Interesting, isn't it? It's in relation. Doesn't that fucking interest people? No, doesn't make you fucking not just me. Doesn't that connect some dots? No. Okay, man, just making sure. All right. Okay, so anyways, so now what do we have happening with economies, right? We're seeing that we're phased out of that initial pandemic crash period. We're seeing that oil supply has been more regulated. And also, don't forget, buy low, sell high. You don't think those market makers, there's actual institutions who got to buy the oil futures contract at -40. Their returns are going from negative integers -40 up to +75 a barrel. It's almost like a positive $110, $120 a barrel change. You get what I'm saying? So that market makers got their price points. They got to enter from the negative integers, from 0, from 5, 10, 15. The same time that the pandemic fear has been priced in. Not just US, oil supply is being more regulated, and that over storage has been consumed into. And what is happening on the demand side? Demand across the world is starting to further pick up, right? As more and more countries are coming out of lockdown or not experiencing the same severity of lockdown compared to the start of the pandemic, right? What else are we seeing coming to the table just over the weekend now? And obviously with the Iran tensions from like 2019, 2020, and those are coming back to the table. But what else are we seeing come to the table just over these weekend headlines, completely flooding the newsroom? We're starting to see Middle Eastern tensions come back to the table. Now, remember, we're going to have to validate the impact of these Middle Eastern tensions. But if this escalates further into physical conflict within the Middle East, whether it's going to be Afghanistan being impacted or Iran, both very obviously oil-rich countries with a ton of refineries, supply chain connections, and so forth, that volatility with conflict in the Middle East is also a bullish factor on crude oil from a fundamental perspective. Okay. Now, besides those fundamental bullish confluences of demand, no, the price of barrel was still -40, but we will never get it. Like, for example, I know what you're trying to say. Oil went to -40, all the gas stations should have been 0. It should have been free for us, but no. Oil at its base crude barrel price, that's just, think about an oil barrel by itself at that base crude price, right? Going to -40. But all these various companies and oil refineries, they're not going to sell it for $0. It's a business still, right? So the people still get fucked and got to pay regular prices, is what I'm trying to say. That's why if you guys notice, if you notice, even when oil crashed and went -40, gas prices were the same. Right? It's because you go from the crude oil production, you go from the mining of it from the earth, then you go from the production. A company is doing this production in refinery. They have their cost of production. Remember, if you go into the first oil educational webinar, we were looking at the cost of production. If oil was to maintain below $20 a barrel for an extended period of time, which it really didn't, we had this crash from like about $20 a barrel here to -40, but snap back the next week. If we were to stay below $20 a barrel for an extended period of time, majority of global oil companies would go bankrupt. The average cost of an oil barrel, the average production cost of a crude barrel of oil for majority of countries is roughly $20. So it costs them, with all figures added up on a rough standpoint, from the mining to the refining to the production to the shipping and all that, roughly $20 to produce a barrel, right? That means as long as crude oil price is well above $20, they're making those difference in profit margin on the millions and millions of barrels sold. For example, Saudi Arabia can maintain oil production at $10. Russia is sitting at roughly around $15 to $17. Other countries such as Canada and the US, roughly around $20 to $23 it costs them to produce 1 barrel of oil. Right? That's why when oil was crashing, who was the first country to say, fuck it, we don't care that oil's crashing. Let's have a price war. What, you guys remember the oil price war? Saudi Arabia. Why? Why were they saying, don't worry, we can battle this out longer than majority of countries? Because their production of an oil barrel is far cheaper. It's almost half of the US or Canada. It's still $7 less than Russia. So what their strategy was is, let's let oil stay low. Let's let the crude oil price stay low. We can manage at $10 a barrel. We might not be making as much profit, but what would they be doing? Killing off competition if we stayed that low, right? Because the other countries whose production is at $20 a barrel, they would end up going bankrupt. They'd be in the negatives of profit. So that's why Saudi Arabia was trying to start a price war. They're saying, nah, let's keep crude oil barrels cheap. Because if you go to the production costs or you Google that, they have the cheapest production costs. But that's why other countries like the Algerias, Libya, whatever it may be, in the Middle Eastern countries, the countries a part of OPEC, the US, Trump during that time when Trump was still in power, Trump was panicking. Like, yo, we got to get production cut. We need to help our oil industry, because the ripple effect of those oil companies going bankrupt would completely crash the energy sectors in those countries. It would destroy millions of jobs. You know how much infrastructure is connected to global oil? How many jobs are created by global oil? All the way from the production and the guys on the rigs to the people in the office doing all the business relations to it, to the accountant, everything. It's an entire industry within itself. Does that all make sense to everybody so far? Right? So that's why Saudi Arabia was the first country when oil was dropping to say, now let's do a price war. Let's make it go even lower. They're trying to kill the competition around the world. Because at the end of the day, these different oil companies, even though they sustain so much power and money, greed does want them to kill each other off. At the end of the day, any one of these oil countries who is a major player, whether it be the US or Saudi or Russia, would love to be the monopoly in oil. They would love to be the only demand point in oil, right? Just like any person would want to be a monopoly in whatever business they're in. You would love to be the only person there that people are going to business for. So there always is that conflict. There always is that war, but or these price wars or this import and export conflict between these countries. That's also why so many of these Middle Eastern countries try to overthrow the petrodollar. They're saying, what the fuck is this? We have all this oil here. We're the ones refining and producing it. Why are we selling it and giving the US dollar all the power? Why don't we sell it in our currency? Why don't we back it by gold? You get what I'm saying? Or whatever it may be. Because with oil comes a lot of control. So you had this market maker move down to -40, and you had a snap, and it was not going to remain below $20 a barrel for long. Too many oil countries would go bankrupt, all the companies involved with it, and it would cause havoc with all the and down the line to a micro perspective with all the individual gas stations, jobs, companies connected to them. You know what I mean? That would cause havoc. That would be an economic crash within itself if oil stayed that low. Does that make sense for everybody? Okay, so now we understand that historical repetition. We understand fundamental impacting factors. We understand the supply and demand. When you're looking at the technical structure of US oil since that crash point, what do you guys see? Just like I told you guys, whether it be on GJ, the US stock market, what do you only see happening between the transactions from buyers and sellers with the economic recovery, demand rebounding, supply being regulated, potential Middle Eastern tensions coming? What have you only seen happen since the crash? Only highs printed or new highs printed, pullback moves and continuations, consolidation zones and continuations, right? And to keep it very simple, okay? So with what I'm telling you guys in terms of demand regulating and going up, the supply going down, the fundamental factors I just told you, the historical repetition and the technicals, what do you think my main bias on oil is? Bullish. Okay, so now let's start zooming in more. And all the key levels got deleted. I got to map new key levels, but we're just going to go based on market structure for now and these price points of interest. But anyways, so what do we have happening from this 76 price point? Pullback phase, right? What is the last price sensitivity area that would validate breaking bullish market structure? Roughly. I'd say about 58 to 60. Right? This is the last price sensitivity area where you broke into a high, had a pullback phase, and then came into new highs. This is also a very significant area. We want to look at these previous highs because these previous highs is where we had this pullback phase 2 and created this technical double bottom. Okay, so higher time frame structure, bullish. Intraday structure is in a pullback phase. That's just intraday structure, pullback phase from these highs. If the Middle Eastern tensions continue to escalate into more military conflict, that's obviously going to be a bullish factor on oil as it brings potential uncertainty to the supply of oil and various disruptions in the supply and demand of oil, right? We also have that overall continued economic recovery across the globe, as well as economies coming out of lockdown, is also a bullish factor for oil. Okay, the price points I'm looking at on oil for buys are either, let's go to the intraday timeframes now. And we're not going to be scalping oil because it doesn't have the best spread across majority of brokers to scalp it. We're going to be looking for more intraday and long-term trades. But these are the price points of interest I'm going to be looking at on oil for buys, as long as we have that. Like obviously in these areas, you want to start observing price action for the rejection confirms, failure to break lower, and so forth. I don't see any fundamental reason right now, unless countries were to go back into lockdown or we had a major reason for an oversupply or a decrease in demand in oil, for us to be selling oil. We can have pullback phases on oil, but there's no fundamental or technical reason to be selling oil in the current time. We actually have demand picking up for oil even further, consumption increasing, Middle Eastern tensions coming to the table. So as we're watching our intraday timeframes, I'll set up alerts to look for oil potential setup as per this webinar around that 66 price point, 62 and 70. I would only sell with what I showed you guys in the higher time frame below $60 a barrel, and we need fundamental reasoning for why oil demand is dropping or supply is going up. Fair enough? Makes sense to everybody? Obviously, our long-term targets would at least be to previous highs and then potentially higher going into the 80s, $90 a barrel. And these are more looking at intraday trades, potentially going into swing trades and positional trades as well. So any questions on oil from the historical repetition of what we looked at 2008, the technical repetition, the impact of the supply and demand on oil, the relation between supply of oil and price of oil. I showed you guys based on those charts, the technicals, the current fundamental catalysts, and the price points of interest. Any questions, concerns, issues on the oil analysis? Otherwise, I'm going to save and upload this and it will be available on Vimeo, but I'll send everything through agent session later, a couple hours from now. Yeah, hopefully that was educational. If you didn't know some of that information, hopefully, you know what I mean? It brings a lot of logic to the markets. It shows you that these things are not random. It's planned, it's precise, it's surgical. When we're looking at the size of the crash of this crash compared to 2008, the financial crash of 2008, right? Because it led to, like, within the stock market crashing in 2008, it also led to a lot of jobs being lost within those various sectors of the stock market. So the energy sector takes a hit as well. But mainly all of those fundamental catalysts, whether it's the 2008 financial crash or whether it is the 2020 pandemic, to me, it's all surgical moves that line up with the economic cycle to make the rich get richer. Whatever they want to say the reason was, they can keep saying that. But the path of what price takes, the setup of setting up a fire sale for the rich for the next potential 5 to 10 years, the actions the central banks take is all the same shit. You know what I mean? But in 2008, the financial crash was also the reason oil went down. Because you had those various sectors within the stock markets impacted, a lot of jobs lost in the financial sector, economic activity dropped during that period, and so forth. It wasn't as harsh as the pandemic, but still. Yeah, make sure you guys rewatch this. You'll probably like click a lot more of the dots in your head and connect a lot more of the dots in your head if you rewatch this too and take notes. But I'm going to save this and I'll see you guys later.